Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, October 22nd. We're just quickly looking at the relative performance of the various indices, and here we have the underperformer. The Russell 2000 was down 1.44%, the Dow 30 was down 0.92%, the S&P 500 was down 0.73%, and the stronger of the indices was the Nasdaq 100, which was down at 0.55%. To the charts, and firstly the S&P 500, and here we see a continuation of the trend to the upside, candle making a higher high and a higher low, but on a black body candle. And the black body denotes a shift in momentum from the upside to the downside. So the sellers have made a decent amount of net bearish momentum between the open and the close. They've also closed with control by closing down towards the low, and there has been some solid price rejection as the market tested up around the 1950 level, getting very close to that 1955 resistance and close to the Ichimoku cloud. Whilst we saw the sellers take control of the market, they were unable to change the trend, and they were also unable to breach the 1925.78 level of previous support. And we do have very strong support in the zone, extending from around there down to about the 1915 level. We also have the Kijun-sen trading around that area at 1919. So we have very solid support down below where the market's trading, as well as the window that was opened up around the 1909 to 1906 level. Now, just looking at our Fibonacci retracement tool, and we've seen the market trade in a bullish manner through all of the major levels, the 38.2, the 50, the 61.8%, but today we saw the market testing to the 78.6% level and be rejected from there in a very strong manner, and that suggests that there is a real possibility of a change of trend. Now, even if the trend does continue to the upside, we're likely to face stiff resistance up around the bottom of the Ichimoku cloud, and then even if we do trade higher than that, we have the 100% level within the Ichimoku cloud at 1977. Looking at our bands here, and we have the market closing around the middle of the bands, suggesting that we have a fairly neutral market at the moment, trading just slightly below the middle. We certainly don't have that strong bearish bias that we had previously, and the area around the middle band is failing to hold as support or resistance. Now, if the sellers do come into the market, possibility of the bottom of the bands around the 1890 level to hold as support. But what we have here is the bands are still quite wide, and it's likely that they're going to start to squeeze up. So what we're likely to see here is perhaps a further retracement of this first time frame downtrend that we were in previously, or we're going to see some congestion occur.